What do you mean you hate jazz?
Just means that when I listen to it, I don't like it.
Yeah, but it's such a blanket statement you don't like jazz. What are you doing right now?
Nothing.
Welcome. We are back. Another day in the market. Got some mid-cap earnings this week. Today we had Disney and AMC, Upstart, Plug, Lucid. After hours, both Disney and AMC fell about 5%. Well, Disney fell 7% actually. AMC fell 5%. So we're getting some earnings. Another green day for the market. So that was good. If you watched my stream on Sunday and I talked about the major support, we've held it so far pretty good. There's a new pattern forming, and today was crazy, absolutely crazy for crypto. You saw a sell-off, then you saw a move back up with this FTX Binance news, and then you saw pretty much a flash crash, Bitcoin making a new low for the year. So crazy times, very crazy times. Later on in the week we have, or tomorrow we have the Trade Desk, Roblox, Fiverr, and Rivian reporting. And then Thursday, Neo, Six Flags, Ralph Lauren. So a few more names to report this week. And on Thursday, we have CPI at 8:30 in the morning, Eastern time. So probably the center of the week is going to be around that. Let's start off with crypto, then I'll talk about other markets, and I'll move into stocks a little bit after that. What's up, Zeke, Nerv, and AK in the chat, and Bitcoin. Oh, Bitcoin. Everything was set up. The double bottom was in at the pattern completion zone. It broke out on the weekly. Back testing previous cycle highs as support. Everything you could ever ask for. And that was it. So it's not the end of the world, but you're hanging on by a thread still, and you were so close. You were finally moving off the breakout. And then this news comes out, and this is why you always have to take technicals and charting with a grain of salt, because the news can come out at any time. And that's why I teach risk management just as much as I teach any other patterns or indicators, anything you can draw on a chart. Risk management is probably not just as important as that, but even more important than that. So it happens. The Bitcoin swing was nicely in profit. This news just came out right down to the stop. At the highs, it was up about, I think, 8%. And let's see if you got the lowest close of the year. Not the lowest close of the year, almost. The lowest close was down around 18.4K, but you did definitely hit your lowest price of the year for Bitcoin. Let's clean this up a little bit. Let me delete both of these. Let's delete this wedge, and let me draw out a level right over here. 17.5K. Let me delete this level. Let me delete all of these boxes, and let's really make things simple for Bitcoin, which, like I said, is hanging on by a thread at this point. I do think that this support might break at 17.5K. What was looking like a double bottom might be flipping into a descending triangle. This is pretty much what you needed to take place for the double bottom to be confirmed. But instead, it's looking a little bit more something like this, which is a bearish continuation pattern. And even if you don't break down like right now, like tomorrow, whatever, at any point, if you can't break back above 21.5K and you break under 17.5K on Bitcoin, there's your breakdown, and then your next support is going to be your high from the summer of 2019, around 14,000. So major volume on this sell-off. I'm sure that we're going to get some more news, but that's where it is for right now. It's technically back at the pattern completion zone of this bullish cipher, but this is literally the absolute last chance. I mean, I guess you could do this a third time and spend another year doing nothing. Like, I'm honestly starting to get frustrated just at the fact that nothing is happening. Like, even with this, like, overall, it was a crazy day for sure. But what really has been this year for Bitcoin is just so underwhelming. It is what it is. Ethereum, that swing pretty much hit the first target, so thankfully it got up there before dropping all the way down to the stop today. It pretty much already tapped that first target, hit the 200-day moving average. At least it had a little bit more of a technical area before this news came out, and it actually did bounce off of this previous supply line that I had drawn. And if you want to put down a support level, I'd say it's around 1226, but really just this whole entire zone over here. It wasn't even too long ago that Ethereum was here, so it's a little bit different. You can see Bitcoin literally, if we're going to be comparing like the relative lows, Bitcoin technically did this. Ethereum did not do that. So Ethereum, in a sense, is showing relative strength. It is outperforming in terms of its trend. It's not made a lower low. It's still at a higher low than the original low this year. So take that however you want to. Moving into other markets, the US 10-year, continuing to just like, this trend line, this red trend line is literally like a magnet. It's crazy. You broke down from it, and now you're just like, you could see pretty much your low of the day every single day. Not every day, but every day that you tested it, your low of the day was right off the demand line. And now you're pretty much your high of the day every single day is right off the supply line, because now you're getting supply off of that trend line. So, I mean, what else is there to say? It's just, it can't get away from this line. So it's really a question of the bullish scenario. Do you break above this first? Or the bearish scenario, is this all just a back test and then you break down over here? There's nothing else to say. There really just isn't. It's being weird. Then we have crude oil, which printed a bearish engulfing candle off of the resistance we talked about on Sunday night. And it now also has some classic bearish divergence. So maybe you could draw a trend line here. And I don't know, because if you look at it like this, it like had like a fake breakout, but I'm just going to leave just the demand line there. And we'll see what happens with that. Moving on to metals, gold, beautiful. We talked about the breakout on Sunday, or we talked about the fact that it was testing a breakout on Sunday. Gold has officially broken out. This is the first big shift that is occurring, in my opinion. We still have the US 10-year and crude oil kind of doing the same thing. Gold is changing trend, and keep this in mind because I'm about to talk about the dollar after I talk about silver. But gold is breaking out, which is very important. It didn't only break out of this channel, down sloping channel it's been in since April. It also broke back above all these lows you can see from last year. Moving on to silver, look at that. Breaking above this high from October, currently testing the 200-day moving average, very key zone. This also used to be support for silver. So metals, out of all things, crypto, equities, bonds, metals are the one. I mean, bonds have already been outperforming, but metals, at least like right now, are the ones that are starting to move. That is something to keep in mind. And now we're going to look at the dollar currency index, which is doing the opposite. It still maybe is in this flag pattern, and it's still holding the 109 support level. So this is kind of your key level for the dollar currency index. But this is now the third time you're potentially making a lower low. The trend is starting to shift a little bit for the dollar currency index. If we go over to the 4-hour, you can see you're just like barely hanging on over here. Let me delete this 110 level. This pretty much is it. Look at all the touches you have off this line. This is the next one. You're really not showing a lot of strength here. If this breaks down, that could help out equities. So we'll see, but remember, we're going into CPI in literally, what, 36 hours or something like that? So that could also affect this very quickly. But this is something else to keep an eye on. We're starting to get these very small shifts. And even if you're trading stocks, noticing this can help you out as a stock trader as well. If we take a look at the volatility index, the VIX, you also got your first green close. I don't know if you had a green day here. That just looks like a red candle or not, but this is your first like green candle that you can see on the daily since October 17th. And it's very strange because while the VIX was going down, for a part of this, the stock market was still going down. Also, while the VIX went back up today, the stock market was green today. So between all these other markets we just looked at, before we even look at stocks, maybe you can see the picture being painted that something, I don't know what, I'm sorry the music's been loud this whole time. Let me put that down. I don't know what, but something's brewing and we haven't seen this shift in months. So keep all that in mind. Now let's talk about stocks. Actually, before we even do that, let's talk about the Chinese stock market. If you watched last week's stream, we talked about this breakout. It has been playing out very nicely. Chinese stocks doing well. We actually have, I think, NIO and maybe a couple others reporting earnings this week. But just wanted to talk about that really quickly. Let's move over to the SPY. So first of all, where are we at? We are touching this 384 level pretty much. You can see this low from the end of March 2021, kind of these lows from May of this year. It's not a huge level, just a little level, but the bigger level is up towards 390. So let's look at the 4-hour, and this is the title of the stream, Major Pattern Forming. Here we go. On the 4-hour chart for the S&P 500, you have a potential cup and handle pattern with hidden bullish divergence. It's not great, but it's good. So really, let's make this very simple. Breaking above this is bullish, getting above this resistance. If I zoom out a little bit, you can see that resistance over here. It was resistance here. It was support here. It was resistance over here. It's extended out even further. And it was support over here. That is a huge level for the S&P 500. So breaking above this little green area I just drew would be your breakout of the cup and handle. However, still in a bear market. Let's say that fails. Breaking under this most recent swing low that you just put in would be the bad news. So in between these two levels, the upper level being 390, the lower level being about 369, it's kind of a little bit of a no trade zone for me. If I find day trades, maybe I'll alert some, but overall for the market, I am currently sitting on my hands waiting to see which side we break to first. The bias is a little bit bullish, but it's in a bear market, so it just makes it more of a coin flip to me. But once we break either direction, I think that sets up a potential quick/large move. First of all, you can just see how many times you were not able to break above 390. We've been under it since the middle of September, almost 2 months now. And then also, if you're not able to do that and you break under this low, then there's really nothing left down towards the 360s area, which is a very big support to be fair, but there's nothing down until then. So these are the two key levels for the market, or at least for the S&P 500, that I'm going to be keeping an eye on. Today we just had a nice autopilot day for the most part. You did sell off a little bit later in the day, but the first half of the day is the 7. Let's go to the, you can see from pretty much here, you just had a very clean morning. Then you went all the way down here later in the day and then you recovered. So the start of the day was very easy for the market. Then you got some volatility towards the end. You saw that VIX spike towards the end of the day, right over here, very quick move up. But that was really your price action going into tomorrow on the 15-minute. I did spot this bearish bat. I shared it earlier in the day. You never really got up to the PCZ, but you got kind of close and you made a type 1 move back down towards this B point of this bearish bat, and now potentially the type 2 move. So futures are flat right now, but going into tomorrow, this is a little bit of a resistance. This little zone over here around 384, 385, that also lines up with this same exact zone from over here in the beginning of the month. So this is going to be the key level to watch for resistance tomorrow. Breaking above this maybe sets up the move to test that cup and handle breakout at 390 that I talked about on the 4-hour chart. However, if you can't do that, you have this green zone under you. Right now, I'm just talking very short term. I'm just talking about tomorrow for day traders. You have this zone under you. Let's say you can't break above that 385-ish area. Around 379, you can see it was resistance over here, support over here, resistance over here, resistance over here, literally support today. That is your big zone beneath you short term. So those are like your levels. Again, I'm not really giving you much of a prediction or anything tonight just because we're in a very 50-50 area. But I'm giving you the exact levels to watch to see how we react to them, because we're going to test one or the two. We are going to at some point. I don't know which one we test first, but those are levels that you want to keep in mind. I just talked about the short-term levels, which were the ones on the 15-minute. And then if you're watching a few minutes ago, I was talking about the larger levels, which is 390 on the upside and then 369 on the downside for the SPY. So it's very simple right now. There's no confusion. Like, I mean, it kind of is confusing, but in terms of the actual chart, it's just where do we break to first? And until then, I'm just taking it easy. So that's a SPY. Then we have the Qs. I don't know. This could turn into a dragon pattern, which is interesting. You can draw out that supply line, and then you have these two lows over here. So if you can just hold your relative lows of the year and then break out the supply line, that would be interesting. That's really the only thing that looks a little bit different on the Qs to me than the SPY, because the SPY is like all the way up here. The Qs kind of came down over here. So that is something that's a little bit different. Thank you, Zeke, for leading that chat. And let's move on to the small caps, which you're getting hidden bearish divergence on the Russell 2000 on the daily. Not great. You do have the hidden bullish divergence, very similar to the SPY. I don't know. I think these are your two big levels. Your support is 177. Why is that your support? Take a look at this, 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 and see why. That is your support. Your resistance is 188 because of these two major lows earlier in the year, and kind of this high as well. Not perfectly though. So those are your two big levels for the Russell. This stream is literally, I'm just telling you numbers. That is the summary of this stream. I'm giving you numbers. I don't have much of a bias. Just remember the numbers. It's like math class tonight. I don't know. So that's the Russell. The ARK ETF is testing a breakdown of this ascending broadening wedge. It's somewhat hanging on. You have this 34 or mid $30 support level. The lower time frames look weak. They do. You had the falling wedge. Look how beautiful of a falling wedge that is. You had the breakout, but it just immediately turned into a bear flag and then you fell again. So again, it's hanging on by a thread. You can see this is now the 5th time this year that you've tested this level. Every single time this year you've held it. But the more amount of times you test the same level without getting a large reversal off of it, the more skeptical it becomes. That's very similar to how I'm feeling about Bitcoin right now. Let's go back over to the daily on Bitcoin. It's just becoming a little bit fishy. You should have gotten a larger move by now. You spent so long, not only on Bitcoin, but also the ARK ETF, holding these levels, but you still haven't been able to get the larger move. It's just a little bit fishy. You've also got some hidden bearish divergence on the daily for the ARK ETF. This is the last zone of support. Look at the weekly chart. Break this, there's really nothing down to like 22. There's literally kind of nothing here. So, I don't know. This literally looks like the dot-com bubble all over again. We talked about this months ago on the stream, and it's just happening now. Which, even though we talked about it before, it still surprises me that we're here. But that's where we're at. So that's my thoughts on the market. The energy sector is continuing to outperform. I did forget to mention this earlier, but we did talk about the bearish things happening for energy, the classic bearish divergence, the wedge, upper Bollinger Band. However, right now the XLE is testing a breakout of the biggest level on the chart, around 93. This was your high from earlier this year in June. We go over to the weekly chart and we zoom out. This lines up all the way with a high from 2008. This is the same high we had earlier this year for energy. This is the same high we had in 2008 before the Great Recession for energy, and you are now testing a breakout of that level. So this is something to keep an eye on. It could invalidate all the bearish things we talked about. Even this massive, somewhat bearish bat that you're retesting the pattern completion zone, breaking above this defeats the purpose of that. So that's the XLE. Moving into some swings and stuff. Well, the only remaining stock swing right now is Fisker. CLOV and Tesla, they got hit. But Fisker is currently down about 8%. I guess it got hit too, but not at the stop yet. Closed the day with the Doji candle. Hidden bearish divergence is almost confirmed. On Sunday night, 2 days ago, I literally said that the variables were switching to bearish short term, and you have pulled back since. Let's see if anything's helped or anything's gotten better since then. A little bit better. You have some hidden bearish divergence potentially on the 4 hour. And then if we go over to the 1 hour, I might be stretching it a little bit now. This is not the most perfect looking inverse head and shoulders, but theoretically, if this somewhat classic bullish divergence plays out, you hold this low. Did have a kind of tweezer bottom bullish engulfing candle in the morning today. Let's just say theoretically you hold this. It's not completely over yet, but get back above 730 at least. That's like if we do this, that's a pretty key level short term. I'd like to see it a little bit higher. But nice bounce off the lows, because Fisker was under 7 in the morning, closed above it. Maybe you could even draw out a I'm like losing my voice, I don't know why. Draw out a wedge channel, however you really want to look at it, but it's not the end of the world just yet. Hopefully it never is, but at some point, like, hopefully the price action follows the technicals. That's all I'm saying. And then we have CLOV, which is just fake out after fake out. It was trying to break up over here. It broke down over here. If we go over to the 1 hour chart, it broke out of a little wedge, but then it went even lower. It's rough. It is rough. It's hard to really say anything. It's like you get one thing after another and still nothing changes. It's just weird. Nothing technically is that different for CLOV. It's pretty much in the same area. Maybe you extend this out, I guess, but even that doesn't really make a difference. I think it needs more data before I can make any like technical argument in either direction. Right now, the only thing that's happening is you're in a downtrend. It doesn't take a genius to figure that out. You do have the potential classic bullish divergence on the weekly, but there's no pattern, there's no support. You're very close to being oversold. The oscillators aren't horrible on the weekly, but that could take a long time to play out, and that's really it. Like, there's nothing much else to talk about. At this point, I would say Wyckoff accumulation is invalidated. So that's really it. Like, it hurts to see, but it is what it is. And I said the same thing like right over here when it was bear flagging to be careful about this, and it got hit on earnings. Like, what else is there to say? Even Tesla cracked under the major support. This is the lowest prices since May of 2021, and you broke the $207 support. You can see all of these lows over here multiple times. Lowest close. If we go over to the weekly on Tesla, it's not looking great. You could probably draw a bunch of trend lines. You draw this one, it looks like you just broke under it, back tested it, kind of got the inverse head and shoulders look to it. What does this remind me of? It reminds me of Amazon, if I can find it. Right, it's literally right above. Reminds me of Amazon, where Amazon, it doesn't have a head and shoulders, but it has this like massive inverted cup and handle, and it's just testing like the biggest breakdown possible. And kind of so is Tesla. Even if we take away that slanted trend line, then we can also just do this, and you're still just testing a massive breakdown. So the stocks that seemed like the strongest ever literally a year ago are now showing a lot of weakness and super large bearish patterns. I don't know, it's just weird to me, because everything just felt so bullish a year ago, and then look what happened this year, and now things feel so bearish, and everybody's moved from the bull boat. Not everybody, but a lot of people have moved from the bull boat to the bear boat, and it's always like that classic thing of, you know, whatever everybody's thinking, like the opposite thing happens. So it just always makes me overthink, but it just gets confusing. But these are the charts, that's what they're showing. We'll see how they confirm or don't confirm. There's really nothing else to say apart from that. Today we did have Disney report. It was down about 5% after hours. It closed after hours at $93. So around like where you can see my mouse right now is where it closed at. $90 is or $91 kind of is a very key support. You could see these lows from the past, a lot of them right off this level for Disney. So around $91 is your key level. You're not too far away from it. You're probably somewhere around here. We'll see how the pre-market looks like. But you're back down to that major level, and then AMC also fell 5% down to 533. Pretty much this orange line is where AMC is at after hours. Before the close, you did have very close to a bullish engulfing candle with triple classic bullish divergence, kind of close to a double bottom too. So if it can hold 530, which again is a very key level, look at this low from July of 2019, this low from April of 2021. I think there might be one other low way back, or not. There's not. So because of those lows, it is a big level. If that breaks, then it's more towards 460-ish, maybe 470-ish from these highs over here. So yeah, I mean, this was like kind of the highlight of the market a year and a half ago. It went from $1 or something to, I think it went to 70 something after hours, maybe, I don't remember. And now it's back at 562. I haven't seen what the short interest looks like on it, but we can take a look. And of course I forgot my tea and it got cold. It's got a 20% short float. I'd say it's like the bare minimum for any squeeze, but again, I'm not calling for anything. I'm just saying it's there if some news comes out or something, which hasn't so far. But I don't know. This is not horrible in my opinion. If it can hold like this zone over here, that is like the big area. We'll see. You can take a look at the weekly too. It's also at the pattern completion zone of a mix of a bullish Garley and a bullish bat, and apart from this little red MACD island, it's kind of close to classic bullish divergence on the MACD, but you do have classic bullish divergence on the RSI. So interesting. Even GameStop is short term at a very interesting level. The weekly looks probably worse than AMC, I would say. The weekly's looking a little bit nasty actually. Look at that. Like testing a massive breakdown of this triangle on the weekly. I mean, unless it holds this, then maybe this is literally the bottom. I mean, just theoretically, if this demand line holds, just imagine this happens. Like, you need perfection from here on out pretty much, but just imagine, like, that's it. That would be crazy, because this is like a 1.5 year long pattern. So this is either really good or really bad, but we'll probably find out in a couple weeks. However, if we go short term, GameStop was in this same range it's back in. Literally, it broke out of this, and I alerted it to premium members as calls, like right here. It was a great trade, one of the best ones in a while. I think it was 500% or something. But you broke out, you came all the way back down into the range. Now you're at the bottom of it again. You bounced off the bottom of it again, and you got a 4-hour bullish pin bar right off the support with potential hidden bullish divergence on the 1 hour. You're in this downsloping channel with classic bullish divergence. On even lower time frames, you can see this wedge over here. I did alert this today. I'm telling you, I'm literally losing my voice right now. I did alert this today, and it did not work out. But I did also alert some Amazon calls, which did work out. But still, I'm keeping an eye on this going into tomorrow. It's still consolidating. We'll see what happens. And that is GameStop. All right, so that's pretty much what I had for tonight. Just gonna keep it short and sweet, 30-minute stream. Timestamps should be up soon. And we can do some take requests. I don't have to leave just yet. If anybody has any takers you want me to look at, drop them in the chat right now. I'll give you a minute or so, and if there's none, we'll just call it here. But yeah, if you want to do that, and if you didn't already, it would be cool if you hit the like button. Just saying. So we have BBIG, NVIDIA, DraftKings. All right, so let's see. BBIG, it was in this triangle pattern. It broke down, and now it's almost at the next support. Well, it's mainly a gap fill. I don't know if it dates back to anything. So this gap fill is around 73 cents for BBIG. You just broke down over here, and then you've been selling off ever since. So that's like your next level, kind of this little area over here, lower 70 cents. And there's pretty much nothing apart from that. NVIDIA, this one is a premium swing. It pretty much just hit the first target today. I alerted NVIDIA to premium members at 131.5 like a week ago or something. And it just hit the first target for about a 13% gain. It's very close to filling this gap over here. If you want stuff like that, premium is in the description. But yeah, I was looking at this large falling wedge, this short-term broadening wedge, and you could see the support level from January 2021. So I saw that it got back above this level, and right over here is why I alerted NVIDIA as a swing to premium members. It's done well so far. You do have a little bit of hidden bearish divergence developing like right at this gap fill level. So if there's anywhere where there could be turbulence, it's even a psychological level around 150. So that's the level to keep an eye on. DraftKings was up 6% today. It is getting a small bounce off this support zone. We got some potential classic bullish divergence, even probably a demand line could be drawn over here. So you're out of support, you've got a little bit of a broadening wedge. This really dates back way back to the COVID crash, really. So this is like, I don't want to make this similarity, but it's like the ARK ETF. Like this is like your floor, and if you break it, then you're going from the first floor to the basement if you break it, potentially. That's the analogy I'm going to use there. So we'll see what happens. UNG, ARDS, or okay. So UNG, this one's a little bit confusing in ways, but let's just try and make it simple. 1840 is your support level. You just tested the 200-day moving average as resistance, which lines up with some lows from May. So these are your two big levels. I guess you got that move after breaking out of this wedge, but that's really irrelevant at this point. So that's really all you had. Like you had this wedge, you had this divergence, you could see it over here. You had both of those things. You got the move right up to your resistance or the 200-day moving average. And now you're just testing that, then you dropped back down. You got this gap to fill around 21.2 and your support's down there at 1840. And then ARDS, I'd probably say this whole entire zone is your support between like 70 cents and where you are right now. And then it's kind of like one large range and you're just at the bottom of it. So if you can hold at the top of this range, it's literally 278. That's 200% away. And at the same time, it is testing a breakout of this falling wedge. So very key make or break area for ARDS. Before that resistance, so you do have a little bit here around 173. You can see this high over here. If you really zoom in, it's also a gap fill, and the 200-day moving average is around 1.48. Apple, that's a good one. Let's see if it broke the support. It didn't yet. You're hanging on. Let's go over to the weekly. I'm gonna just draw a zone here because it's pretty choppy, but this is it. This is like the inflection point for Apple. You're right in between it. So if this happens first, good. If this happens first, bad. See what happens. Can I leave these? I think I'm going to leave these up. Here we go. Look at the weekly demand line on Apple. I'm not sure like how you're drawing it. I had this before, but it already broke it. Maybe you're talking about how it retested it from like July. Demand line from July. That? Not too sure. Maybe this? There's a lot of different ways. I'm not exactly sure how you're doing it. Just confused. Send a picture in the Discord. And if you're not in the Discord, link for that is in the description. Check out all the links. Hit the like button. If you're new to the stream, hit the subscribe button. Thank you for watching the stream. Should be live tomorrow night, most likely. Have a good night.